it's really an incredible opportunity for us to present ourselves on this platform. Thankful to ET as well as NAFCOP and Gujarat State Federation for giving us this opportunity. My name is Kushal, representing Knight FinTech here. We are essentially a cloud-based treasury management platform, AI-enabled, helping banks, treasury managers in taking day-to-day treasury-related operations, intelligent decisions efficiently and precisely using the technology. We started this journey back in 2016, having had close to a decade experience of managing large treasury for global hedge funds. We were looking to bring what kind of international experience and global best practices we can bring in to India to serve our banking industry. So when we started to study the cooperative market space, we were surprised to understand few key facts. What we could analyze that close to 3 lakh crores of assets, or about $50 billion of assets, were being managed 100% manually. We did a very detailed study. Based on the study, we could figure out that less than 10% of our cooperative banks are actually using any treasury management solution. To top it up, less than 1% of cooperative banks were using any analytical solution to use a treasury, to manage their treasury. So as part of today's agenda, we'll be trying to cover two key aspects. One, what is the importance of the treasury and how it's the core function within a bank and can actually drive the profitability and many other digital agenda that banks want to drive in. And the second would be how digital technologies can enable the treasury manager in managing the treasury efficiently. Over the last 2.5 years, we have achieved certain milestones and have achieved certain recognitions from banks as well as some government bodies. So essentially, the idea of the Treasury 2.0 is how AI-enabled digitalization can help, and it's a necessity, not just a luxury. So for the interest, for the audience, would like to first understand what exactly is a treasury when we are talking about. While most of us would probably understand that banks' primary business is taking deposits and giving out the loans. While banks cannot lend 100% of the deposits they have, only 60 to 65% of the deposits they can lend. As per the RBI guidelines, they have to maintain minimum 19% as SLR, statutory liquidity ratio, and they can go up to 10% in non-SLR assets. So essentially, we're talking about close to 30% of the balance sheet, close to 30% of the deposits being invested somewhere. And this was the first piece of the problem that we were trying to solve. If you look at the core importance of the treasury, this slide speaks a lot, but just if we could talk about the key numbers, if you take a model bank, let's say is having about 1,000 crore of deposits, the bank would have roughly 600 to 650 crores of lending book and about 300 to 350 crores of treasury book. The bank would have close to 6 crores of profit after tax. Now imagine by using some technology, leveraging some technology, bank is able to increase the yield on the treasury book maybe by 50 to 100 basis points. That can translate to increase in the profitability by over 50%. That's huge. And again, imagine what a bank can do with the additional profitability that bank can achieve. This could be one of the source of the revenue that can be routed to technology, and it can become a perpetual machine to upgrade the technological infrastructure within a bank. So why are we underestimating treasury if it is such an important function within a bank? Again, I think the picture is pretty much obvious to most of the CEOs and treasury managers here. When we're talking about a lending book, which is roughly 2/3 of the bank's balance sheet, we have maybe 100 plus employees who are serving the lending side. If we talk about the treasury business, we are talking about only 1 or 2 key people who are managing the entire treasury in a mid-sized bank. And if a large bank is there, there might be a team of 5 to 10 people who are managing, running a treasury book, running into thousands of crores. That's quite huge, and that's why I said, okay, even the resources are quite expensive on the treasury side, and that's where we believe that, okay, how we can leverage the technology, how we can make the technology affordable to smaller banks, and how they can get the bottom line is what we want to achieve here is that the sophistication and the research capabilities that probably a 5 lakh crore deposit bank has, how the same kind of technology and capabilities we can bring in to a small bank of maybe 500 crores or even 100 crores. So it's like trying to bring the technology and trying to help in a level playing field. Moving further, so what are the key aspects in a treasury that we are talking about? We have to understand what is the cost of non-compliance or violation of RBI norms? So there are several norms by RBI related to interbank deposits, counterparty limits. There's different ratios are there that has to be maintained. The structured liquidity statement has to be prepared. Liquidity risk management has to be done. All of these things is quite important, and there is a cost attached to it when we are doing a violation. And since most of the stuff we are doing is completely manually on Excel sheets and probably registers, there are good chances that we miss out certain things and eventually we get a big bill from RBI. Again, the cost of your wrong trades or cost of your missed opportunities to be considered. Now, consider a platform that can actually help, that can actually consider your entire compliance, automation of the entire compliance related to structured liquidity statement, SLR, non-SLR, interbank deposits, etc. Imagine like an intelligent assistant which like in day-to-day helping the treasury manager in taking investment decisions or selling decisions. So just for giving an example, so today there is a bank which gets a deposit of let's say 3 crores for maturity of let's say 6 months. Now the treasury manager has to take a decision that okay, where this surplus cash has to be invested. So which duration, which security out of thousands of securities to be invested. On the other hand, a loan gets approved from the credit team and the loan is to be disbursed. From where that money is going to come. So the treasury manager has to sell a particular security to fund the loan. So it's again the same thing. So day to day we are taking certain very critical buy and sell decisions related to SLR and non-SLR. And again, that's what we believe in, that if those decisions are being done using technology, using mathematics and statistics-based models, those decisions could be much more prudent, which can drive significant profitability and growth for the bank. So at a high level, this is how the platform works. We are talking about essentially 4 key modules over here. The first piece is essentially talking with the core banking solution. So the platform is aware about how the core banking solutions, how the assets and liabilities are positioned within a bank. It understands, it effectively enforces a risk management framework to the bank. It essentially, which is pre-approved by the investment committee of the bank. It makes sure that in day-to-day treasury management, day-to-day treasury operations, all the risk parameters which are being set by the investment committee, consistent of the management and the chairman, is essentially being enforced in every single decision. It also is aware about the market environment of the SLR and non-SLR. And it says that, okay, this is what they can essentially use from the investment perspective. The final output comes in as an optimum portfolio, given the market environment, given the bank's balance sheet, and given the risk parameters. There's also very important aspect that most of us are probably underestimating is the importance of asset liability management framework. What we're talking about here is how an assets and liabilities framework can be used to take any kind of investment decision. It's very important, and again, most of the banks that we have observed, what we see that the typical structured liquidity statement that we are preparing is merely being done from the reporting perspective, but what we want to do is that how we can position ALM as the core position, as the core value proposition for the bank, for the business competence. So we talked about the 4 key modules. The CBS engine, which is essentially talking with the core banking solution. A forecasting engine, which has an information about last 15 years of every single trade that has happened in SLR. All securities, every single trade that has happened, it has built fairly sophisticated models that can help in forecasting about the yield curve and where the rates are heading, and accordingly how to position our SLR and non-SLR portfolio. And a bond pricing engine, which is essentially tries to do what is the theoretical price of a particular bond and whether it's a good buy or not. So we are like already live for the last 2.5 years. We have like more than 15 banks are live, and also there's another product for corporate treasury. And we currently pipeline is of about 50 banks. We are right now operational primarily in Maharashtra, and now we are expanding our roads to Gujarat as well as Karnataka. These are the few of the actual results that we are able to create a delta of more than 1%, and these are the actual live results. There are a few case studies for the interest of the time. We will be very quickly seeing them. So the idea is whether whether the bank's management is conservative in nature, there is a possibility of rebalancing of the portfolio so that we can add at least 60 to 70 basis points in the yield. And even if it is quite an aggressive bank, we can still add a delta on the returns, and at the same time we can see, quite interestingly, even the risk has got reduced. So from 8%, the risk can go down to 3.5% in the Treasury portfolio. That is quite a big improvement on the Treasury side. Way forward, what we are seeing is the overall Treasury solution, it's not just limited to the scope of the SLR and non-SLR. What we see is going forward, essentially the technology will empower the entire ALCO. So the Asset Liability Committee, which is the apex body within a bank, which is taking all the decisions related to deposit rates and lending, can be linked with that. So imagine when we have the understanding of how the core banking solution is performing, we have the information about the transactions level of our clients. So we understand who is our client, we understand their profile, and based on that, we can precisely target that, okay, what should be the right strategy for giving out a loan, or what should be the right strategy, what is the sweet spot of loan, and what is the sweet spot of deposits. So those all information can be mined through this data. Going forward, there is also a product which we have very recently launched in the market, which is essentially on the lending side for SMEs and corporates. So with a matter of few clicks, a bank can understand the entire financials of a business. It can understand the entire financial position of a bank. If there is any kind of accounting mistreatment has been done, that can be detected. It can pull in the entire data from the GST. It can understand who are the counterparties that a business is dealing with, what is the credit profile of even those counterparties. So essentially, when we are giving out the loans and the loans are being funded through a certain counterparties from where the payments are coming, so what are the likelihood of defaults of those guys who may not be able to pay to our client, who in turn may default in paying the payment. So this is also the product which is quite interesting, and we're getting a lot of traction for the same product. So at the core, what we want to position is essentially digitalization is the only way ahead for any kind of a technology to have a good reception in the market. There has to be one or more of the three features. Technology has to be the core enabler and should be doing one of the three things. Either it should save costs, it should increase revenue, or it should decrease the risk. So one of the three things it must be doing and we see that any technology which is able to bring one or more of these three aspects would be basically embraced by our cooperative banks. And that's why we say that given the kind of the hyper-competitive market it is becoming, the more and more competition is coming in, adapting to the technology, adapting to anything that can increase the revenue, decrease the risk, or save the cost is something which is of necessity and not just the luxury. Just like final quick summary of our profile. So as we mentioned, we already operational for last 3 years. We are a venture-backed company. We have an office in USA, we have an office in Singapore, and in India we have around 5 offices. We'll be covering those. And about my profile, so as I mentioned, so we had close to a decade of experience, 10 years of experience managing large treasury of about $500 million. Before starting this company, essentially the offices, we talked about Singapore, Mumbai, Ahmedabad, we just opening up, Kolhapur we have an office, Pune and Nagpur also we are opening an office. So this is the standard process. We have our booth over here, and we would really urge all of you to come to our booth and essentially let's have a detailed discussion of how the process is. But at a high level, we first actually try to understand the position. There is like a first high level diagnostic of the portfolio, and that follows by a proposal that we put on the board, and then we take on. So would really request all of you to come to our booth and see a product demo live. Thank you so much. Really appreciate your patience here.